content on this channel is for education and entertainment purposes only. It does not constitute financial advice. Always remember to conduct your own research. This is the ultimate guide to the monthly income pie on Trading 212. So before we get right into it, I just want to say this is not financial advice and this is only for educational purposes only. I am only showcasing my journey on the internet. So with all that being said, let's get right into it. What exactly is this pie? This pie is a monthly paying reinvestor machine that is built on Trading 212, combining long-term growth and sustainable income for monthly payouts. We also use some higher risk within the pie to boost the yield up a little bit. I think every element of a portfolio should have some kind of risk in there, so that is the reason that is there. It's also a self-balancing pie, so if you use self-balancing within the pie, what it will do, when you add money in, it will then balance itself out as I add new positions or change positions long term, because the pie will be changing when we get new funds within the UK, because as we know right now in the UK compared to the US, we lack a lot of great funds what are out there which we should ideally have on the UK markets, but regulation stops us from doing that. So what exactly is the strategy to the monthly income pie? So it uses a 3-layer system. The first layer is the growth engine. That is 35% of the full pie. This combines and builds your capital over time. It keeps the income sustainable through tough markets using growth assets such as GGI, EQQQ, VWAG, and there's also another one that I use called JAM, which is the JP Morgan American Investment Trust, which may be getting added to this pie sooner or later. So let's have a look right now. We've got 35%. We've got JGGI at 15%, which is global growth and dividends. Then we have EQQQ, which is 10%, which is the NASDAQ 100 growth ETF. And then we have VWAG 10%, which is the S&P Equity Growth Fund. What's the purpose of the growth side of it? Long-term appreciation in case we see any decline within the portfolio. This is what is the foundation level of the portfolio. Number 2, we have sustainable income engine, and this is 51% of the full portfolio, built from quality companies and funds generating consistent cash flow. I will quickly run through what the fund is, the percentages, and the purpose of the fund. So we have YMAP slash YMAG. As we know, this is the Big Tech 50 covered calls by hand ETFs. We have an allocation of 10%. Then we have JEQP, which is 8%, which is the NASDAQ Income Fund by JP Morgan. Then we have JEIP, which is 5%, which is the US Income ETF by JP Morgan. Then we have Main Street Capital, which is a really solid company, BDC. 8% of the portfolio. This is monthly dividends plus private credit. Then we have JEGP, which is 3% of the portfolio. This is a JP Morgan Global Income Fund. Gold ETP, which is 3%. That's a covered call, a gold play. Then we have SSHY Bond Fund, which is 3%, which is high yield bonds. Then we have Google ETP by Income Shares, which is income on Google stock. Then we have Amazon ETP and Meta ETP. Meta ETP is 3%, Meta ETP is 5% and Amazon is 3%. Both of those funds are by Income Shares again. As we notice, we don't have many high yield ETPs in here from Income Shares, and that is because I've kind of stuck with the ones that I think are going to work long term from the old ETPs. And the ones that I think may not work if the new strategy doesn't work out, that will be because I have set them to a lower allocation just to see how the new strategy is going to pan out. And if you notice, I have not added none of the new funds yet, and there's a reason for that, and that's because I want to see some data. I want to see the new strategy working, because you can't just keep adding and changing things just because Income Shares have said, oh, this is new strategy, may work. We want to see some proof that it works first. We want to see the proof in the pudding and see exactly what's going to be going on with Income Shares to start with. So this is why I have not added any more products by Income Shares. So what's the goal of that side of the portfolio? That is steady income, that's diversified. And then allocation 3 of the portfolio would be 14%, and this is the higher risk income side of the portfolio. This is what adds the flavor to the pie, and it also adds that element of risk, and with that comes a higher yield. And we want a nice bit of risk into the portfolio, but not too much, and we don't want to put too much risk on it. So this is designed to bring in extra monthly yield with added NAV volatility, so we can harvest that volatility and create income with it. Small allocations to manage risk. So the first allocation is MSTY ETC 5%. So this is the MicroStrategy income play. Then we have Nvidia ETP 5%, and we have Coinbase ETP 2% and Tesla ETP 2%. These are all pretty volatile moves. Well, apart from Nvidia, that's a bit lower, but the rest of them are pretty volatile, which creates pretty good income long term. But we do need to see how the new strategy plays out with income shares for these to be staying in the portfolio. I think next month is the first month that we're going to see how the new strategy is going to work, so I'm really looking forward to that. So the goal of this is to boost income, but tread very carefully because these are high risk plays. So as we can see, if we look at the pie allocation as a little visual, we've got growth 35%, income 51%, and then the higher risk at 14%. I'm just going to dig a little deeper into how I actually use this pie. So when I'm using the pie on Trading 212, I generally have dividend reinvestment on for this pie because they generally pay on different weeks. So it really helps to reinvest that dividend, get the ball rolling, get a lower cost basis if assets are down. I always have the pie on self-distributing, so you don't have to manually rebalance the pie. It doesn't matter if Trading 212 are giving you the updates, like need to rebalance this pie because you've got a 1 out of 10 rating on balancing. It really doesn't matter. Just put self-distributing on, and then when you add more money in on your payment schedule, it will rebalance itself out. It'll put it into the assets that have got the lowest allocations. This pie will be actively managed, so I'll be rotating into better assets as soon as they drop. Like recently we've seen good funds come out from YieldMax. We've seen YMAP and MSTY come out. So these have been added into the pie. And when this does happen, like we've got another 2 new funds coming from YieldMax. We've definitely got CHPY coming. So when that comes, that'll be dropped into the pie because it's done great in America so far. So this is diversified across income styles and risk levels. And I just wanted to put this in there because I get a lot of questions about when I remove assets out of the pie, what exactly do I do with them? So exit plan on removed assets. If I removed assets is in positive total return, I may sell that to lock in the gains. If an asset is negative while removed from the pie, I will most likely hold it inside the brokerage account, export it from the pie, hold it until it turns positive, and then I'll review it and maybe sell it at some point. It just depends on the situation, like I've just mentioned above. So final thoughts on this pie. This is the ultimate blueprint for building monthly income on Trading 212 for UK investors so far. We're using the best funds that we've got so far, even though it's nothing compared to our US counterparties. And that's why we have to blend growth to get some stability into the pie and use a little bit of risk as well. More sustainable with the growth in there. It's income generating and it gets balanced a lot better as time goes on. And as better funds come out, we're going to have to keep re-adding better funds into the pie. And I can't wait for in a couple of years' time when we've got all these competitors, we've got all these funds we can actually go at, just like the Americans. They've got so much better funds than we've got. They've got the pick of the bunch. We're really limited to what we can use right now, but hopefully in years to come, we're going to have the best funds come into the European markets. So guys, tell me what you think of this pie, because I think so far we've got nearly 2,000 followers of this pie. It may be like 1.5k. I haven't checked in a while. But do you run this pie? Do you like it? And if you want to see any changes, let me know in the comments down below. Thank you guys. See you in the next one.
To talk about Snowball, if you want 10% off Snowball, please use the promo code below and my link below, Cashflow King, to get 10% off. If you would like to use my pie so you can invest exactly the same as I do and the rest of the people who have also copied my pie, a lot of people have also pulled the trigger on this. If you want to join a Discord also with other like-minded investors, you can do that. Join our Discord, guys. Let's get talking.
Please remember to hit that like and subscribe button, guys, and also hit the notification bell to keep updated with future video. Thank you guys, and I will see you in the next one.